Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you're a regular follower of the market guys, you'll know that I leave my lines on the chart each and every week so you can see how accurate candlestick charts are for forecasting the market. And as I zoom in here, you'll see that my forecast from last week on the Dow was that we would rally early on in the week, and I drew this diagonal line and then formed a pivot point lower, also saying that towards the end of the week we would most likely pull back, and the end of this line is my target. So you can see how accurate the technical analysis is as a tool for forecasting. It's just absolutely amazing, the pinpoint accuracy of what we're looking at here. So what does that mean for next week? Well, now that we have reached our target, you can see that on the way down, as the prices were dropping Wednesday, Thursday, and Friday, you can see that the volume down here was also dropping. Now, what does that mean? Well, it means that the sellers are losing some of that momentum. So now the buyers are more likely to roll in when they see weakness on the sell side. So my forecast for next week is going to be higher market. And I think that we're going to see a higher market right up until Friday. I don't think we're going to go much lower, but I think that by the end of next week, we're going to move right back up to test this high. And ultimately, there's a resistance point up here right around 257 on the diamond. So again, my forecast for next week is higher on the week. Now, if we look at the spiders, which is the SPY, ticker symbol for the S&P 500 ETF, again, my lines are on the chart from last week. I said that Monday we would most likely move higher and fill this gap. Look at this. Again, how accurate this is. It's pretty amazing. This little gap right there became a target for us last week. And if you've been following along with gap trading strategies, you'll know that 80% of the time gaps fill. So there we go. On Monday, we filled that gap to the penny, and then we reversed. Now, why did we reverse? Well, I mentioned this last week, but I'll repeat it again because it's worth learning, because it's just so accurate. Again, that 80% of the time after the gap fills, the markets have a tendency to reverse. So if we have a gap above the market and the gap fills, the reversal heads to the downside, and that's exactly what happened. Now, another interesting thing is that the gap down here has now filled. So there's an 80% chance that the spiders will rally now that that gap has filled. So there's a couple of things that are giving us the buy signal. It's not just the gap filling, but we have 5 red candles in a row. That's known as a stale red light. So we're long overdue here for a green candle. And what I'm going to do is I'm just going to erase this, and I'm going to draw my forecast for next week. Just like the diamonds, I think that we're going to rally right up. And I think we're going to test that resistance point right there. Whether or not we'll break through, we'll have to wait and see. But I think that we'll at least move up like the diamonds because the signals are looking a little bit more bullish than bearish. Okay, let's take a look at the Qs, which is the NASDAQ market represented here in the power shares. And again, look at how accurate this forecast is. I said that we would rally up Monday and Tuesday, which we did. Interesting thing is that on Tuesday we had a bearish engulfing pattern, and we pulled back and more or less stayed on this support level right there. So that is, again, as expected, forecast 100%. So what does that mean for next week? Well, I think we're going to bounce off of this newly established support level just like that. You see, when a resistance line is broken, it becomes support. It's called role reversal. So back here was resistance. Again, it tested as resistance. It broke through resistance right there on March 9th, and then now it's acting as support, hence the reason why I think we're going to bounce off of that newly established support level. Now let's take a look at the Russell 2000. This is a more broad-based index. Again, my forecast was right on. I said we would rally up and then pull back. We didn't quite hit the target level right there, but that's close enough. That's within pennies. The low from Thursday is very close. And on Friday here, as I record this on the 16th, you can see that we have a bullish engulfing pattern right there. So this fits right in line with what I said for the rally expected right across the board, and I think we're going to see that with the Russell 2000 as well. I'm going to clear all of these lines to make it nice and neat for you. I'm going to leave this as a resistance point because I think that the markets will rally up from that bullish engulfing pattern and eventually test this resistance right there. So I'll leave that in place. Now, if you, again, are new to The Market Guys, make sure you go to The Market Guys website, www.themarketguys.com. Click on the video tab right there, and it'll bring you to our video library. Now, there's a couple of things that I mentioned, first of which was the role reversal and how that works. That's right there. You could watch that 6-minute video and learn about the role reversal. And remember gap trading strategies that I mentioned about the 80% rule. Go to Trading the Gap, and there's a video there. I think it's 7 or 8 minutes long, very short. It'll give you an idea of how we trade the gaps here at The Market Guys and how you could use that as a tool for also managing risk. So thank you for joining us. I really appreciate your following us each and every week. I'll talk to you soon. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.